Yes. So the topic which we are going to discuss now is adjustment of capital. Basically, what is this concept is when any changes that happens in the profit sharing ratio, either among the existing partners or at the time of an admission of a partner, they will also decide what should be the capital of the overall firm, and that particular capital should be in the proportion of what ratio, based on the incoming partner share or based on the old partners share of profits. And here the partners will come to a conclusion whether there is a shortage or if there is a surplus in the capital balance, it should be withdrawn or it has to be deposited. That means if I have a shortage in my required capital, I should bring the difference in the capital. On the other hand, if I got enormous capital than what it is required, then I can withdraw the balance portion which is not required. So this is the ultimate objective of the concept of adjustment of capital. So here we will be learning two different types of questions, or we'll come across two different types of questions. One, the adjustments to be done through cash or bank account, and the second one is adjustment to be carried over through partner's current account. Okay, so just a minute. You can parallelly take my notes, not an issue. Okay, adjustment of capital. Okay, so in this concept, we are going to see the two varieties. One is adjustment through cash or bank account. The another one is adjustment through partner's current account. Can you able to understand my handwriting? Okay. So adjustment through the partner's current account and the other one is through cash or bank account. Okay. Let us see what is this entry. The entry with respect to adjustment of capital with respect to cash or bank account. Here we have got two scenarios. One, there could be a scenario where there is a shortage of capital. Okay, there is a shortage of capital. Or the another scenario is there is a surplus. You could have surplus of capital. Okay, either a shortage in your capital or surplus of capital. Okay, usually when we have a shortage in the capital, what we should do, we have to bring the further capital. Okay, that is the treatment for it. Here you have to bring required capital. You have to bring required capital. And here, okay, withdraw excess capital. Now let us go for the journal. When you want to bring further capital, what happens usually when you introduce capital? What is a journal? Cash or bank account is debited to the respective person's capital account. Here it's going to be partner's capital account. That's the only change. The journal is cash or bank account is debited to partner's capital account. This is the journal we'll follow in the concept of adjustment of capital through cash or bank, shortage of capital. On the other hand, if it is going to be a surplus of capital where you're going to withdraw the amount, here the entry is reversal of this. Partners capital account is debited to cash or bank account. So, with respect to the concept, or with respect to the accounting treatment, or with respect to the journal entry, if you have any doubt, let me know before I proceed for the next case. Okay, thank you. The second one is you are going to route up through the partner's current account. So, here also you have got the two different scenarios. One, you will have shortage of capital. Okay, and the second one is surplus of capital. When I'm talking about the shortage of capital, same treatment. Okay, bring further capital. When it talks about the surplus of capital, it is withdraw excess capital. Now comes the main twist. The journal entry. There, okay, the journal you're using cash or bank account. But here you're going to use, okay, partner's current account. Partner's current account will be debited to partner's capital account. That is, in place of cash or bank, you are going to swap it with partner's current account. That is the only change you are going to undergo, nothing else. Okay. Over here, the reversal of that. That is, partner's capital account is debited to partner's current account. Any doubt after this, you let me know. Okay. This is what they had just made you to understand over here as a journal entry. You can see that they have made it just simple for adjusting the shortage of capital and for adjusting the surplus of capital. They used bank account, okay, that is cash or bank account is being debited and to concerned partners capital account. On the other hand, or concerned partners current account. Okay, that is if the pattern is to adjust to current account, then the partner's current account will be debited, followed by that the capital account. Same over here. Concerned partner's capital account has been debited, okay, to cash or bank account. If not, the concerned partner's current account. This is what I explained you in detail. What should be done in case of adjusting to cash or bank or if it is to current account. I hope the concept is now clear up to this. Okay. Now let us understand the question and let us also make it very clear how to understand that this particular question is based on adjustment through cash or bank or adjustment through the partner's current account. That is very important. So here a question. You have partner named as P, Q, R and S in a firm who are sharing the profits and losses in the ratio 1 is to 4 is to 2 is to 3. On 1st of April 2016, their balance sheet was as follows. So in the balance sheet, you have the capital information of all the four partners. Then you have something called sundry creditors and then workman compensation reserve. On the other hand, in the asset side, you have got the two different types of assets, fixed assets as well as current assets. Now, before we proceed the problem, Okay, these types of problem will come in 6 marks category. A full-fledged problem you can expect in 6 marks category. And whenever you are going to solve any problem where it has a balance sheet, always remember the special note. Okay, when you are going to work out a problem using your balance sheet, you should always check the following 6 items. Okay, there are some 6 items which you have to check it very keenly out of 7 items. First, you should take the accounting treatment or complete the accounting treatment of these 6 out of 7 items. Then only you can proceed for any other items which is given in the balance sheet or which is given in the adjustment. Now, let me make you to understand what are such 6 items. Basically, balance sheet is being divided into two segments. One, the left hand side is liability side, and on the asset side, the right side is asset side. Out of the 7 items, if you see, 4 items will fall on the liability side and 3 items on the asset side. Now, what are those 4 items if you ask? Let me record it one by one. First, your general reserve. Okay, the first one is your general reserve. If you don't have any claims, then the entire amount of general reserve has to be distributed in the old profit sharing ratio among the old partners. Isn't it the accounting treatment of general reserve? So that you should first check it out in the given balance sheet whether you have general reserve and any additional information pertaining to general reserve. Okay. If there is, then do the corrective action for it and then proceed for the next item. The second item is your WCR, Workman Compensation Reserve. Check whether WCR is available in the question or not, and then compare the question whether you have any claims existing with respect to WCR. If you have that, then according to the situation, because we have various cases in WCR, your claim amount is less than the reserve amount. Your claim amount and the reserve amount are exactly equal. Your claim amount is more than the reserve amount, where there is no information about the claim, and where there is no reserves in maintenance but claim has come. Like that, we have some 5 different cases. So, which case the problem fits in? According to that, you have to do necessary journal entry or corrective actions and then move for the next item. The next third item is your IFR, Investment Fluctuation Reserve. Check out in the question whether you have IFR. Okay, if there is an IFR, then check out the additional information for the adjustments for IFR. Even in IFR, we have various accounting treatments to be taken care of. Accordingly, do the needful. Now, the fourth item under this liability side is you will come across profit and loss account. What do you mean by this profit and loss account? It is nothing but your accumulated profits, or I'll say it is your undistributed profits, or it is also called as retained earnings. Am I clear with this? So if you are finding any P&L account appearing on the liability side of the balance sheet, it is denoting the accumulated profits or undistributed profits or the retained earnings. So this amount should be credited to the old partner's capital account or the current account in that old profit sharing ratio. Is it clear? Okay. Now, what are the 3 items, sir, with respect to the asset side? It's quite simple. With respect to asset side, these are 3 items which we need to take care of. Number one, goodwill. Number one, goodwill. Goodwill appearing inside the balance sheet denoting that it is a purchased goodwill. Because goodwill are of two types, purchased goodwill and self-generated goodwill. But the self-generated goodwill will not be recorded in the books of accounts according to the guidelines of AS 26. So only the purchased goodwill will be recorded in the books of accounts. So balance sheet is a book of account where if goodwill appears inside the balance sheet in the asset side, then it is denoting the purchased goodwill. The purchased goodwill should be distributed, that is, to the old partners' capital account in their old profit sharing ratio. So if goodwill is in existence, then do the needful. Move on to the second item. The second item is advertisement suspense. Advertisement suspense, which is nothing but deferred revenue expenses. It is your deferred revenue expenses. So if you find any deferred revenue expense, advertisement suspense appearing inside the balance sheet asset side column, then it should be debited to the partner's capital current account in their old profit sharing ratio. Hope you are aware of this one, right? Oh. The next item which we are going to see is, again there is a possibility of profit and loss account appearing on the asset side of the balance sheet. This profit and loss is denoting the, okay, accumulated losses. Okay, it is our accumulated losses. So now if you see, there are four items on the asset side and three items on the liability side, so altogether seven items. But why I said six items is because either profit or loss, any one only is possible. Both are not possible, right? Any one is only possible. So that's the reason there are totally seven items. Okay, I mentioned what are those seven items: four on the liability side and three on the asset side. But among the seven items, okay, six items. Okay, நமக்கு six items இருக்கிறதுக்கான possibilities நிறையவே இருக்கு. Okay, so first you have to ensure in the balance sheet whether any of these seven items is appearing. If so, first take the corrective action for those seven items or six items or how much is given the question, and then you have to proceed further. Okay, so this is the first step which we have to follow. Now when I go through the balance sheet given in the question, I'm finding that there is something called as workman compensation reserve. Okay, I hope you are aware that they can give this workman compensation reserve as a workman compensation reserve itself, or they may also substitute it with workman compensation fund. Okay, can also be replaced as workman compensation fund. So other alternate words should also be kept in mind. Okay. Now they are giving you some additional information below the balance sheet. What are they? From the above date, okay, it is mentioned that from the above date, partners decided to share the future profits equally. So NPSR is given to us. For this purpose, goodwill of the firm was valued at rupees 2 lakh something. Okay, now we don't have goodwill appearing inside the balance sheet. We have got goodwill appearing outside the balance sheet. So any goodwill which is appearing outside the balance sheet is nothing but it is a self-generated goodwill. Okay, which you have learned in your chapter number 2, nature and valuation of goodwill. Okay, it is a self-generated goodwill. Now let me give you the accounting treatment of self-generated goodwill. Okay, So where it will appear? It will appear outside your balance sheet as an additional information. If you have a self-generated goodwill, follow these steps. Number one, find out gain or sacrifice among old partners. So first you find out the gain or sacrifice among the old partners. Number two, apply the gaining ratio or sacrificing ratio on firm's goodwill to derive the individual share of goodwill. So second step is apply the gaining ratio or the sacrificing ratio on firm's goodwill to derive individual share of goodwill. That is individual partners. Okay, that is partners share of goodwill. Number three, pass journal entry. What is a journal if you ask? The journal entry is gaining partners capital or current account is debited to sacrificing partners capital or current account. Able to understand? Any doubt so far? Okay. Now, this is the treatment of your self-generated goodwill. Okay. So let's move on to the question and to understand whatever is given further. It was mentioned apart from this that the partners also agreed for the following. Number one, there is a claim against workmen compensation reserve amounting estimated at 2 lakh rupees. See, we have a claim for 2 lakhs, whereas we have got an amount of only rupees 1 lakh 70,000. So that means our reserve is limited, whereas claim is unlimited. Okay, claim is exceeding the reserve value. So if this is the case, we have to open an account called revaluation account. Okay, we have to open an account called revaluation account. So because there is a 30,000 rupees excess. The next one, if you see, it was mentioned very clearly capitals of the partners were to be adjusted. The word adjusted is given. This is an indicator that this problem comes under the concept of adjustment of capital. So this is a concept that comes under adjustment of capital. The clue word is partners have decided to adjust their capital. So the word adjusted is the indicator. According to the new profit sharing ratio, okay, they have decided to adjust in the new profit sharing ratio by bringing or paying cash as the case may be. So here what are the indicators? To understand it's a case of cash and it is a case of adjustment of capital. You will have the word adjusted and you will have the word okay by bringing in or okay by paying cash. Understood? So the Yes, 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 of course. Okay, so for the concept, you'll have this clue word adjusted, okay, and bringing in for cash basis, okay, bringing in, okay, bringing or paying cash. So this is an indicator, okay. So adjusted is a clue word and then bringing or paying cash. If you find these words, then it is a concept of adjustment of capital through cash. Clear? Okay. Now, let us see what the question I've asked is. The question I've asked is to prepare revaluation account, partners capital account, and also the balance sheet. So we need to prepare all the three revaluation account, partners capital account, as well as a new balance sheet. Okay, so let's work out the problem and we'll see what is to be done. So normally we have come across that revaluation takes place on assets and liabilities. Value go up, value come down, okay, and revaluation expenses will be there. All these things we take into account and we'll be able to complete the entire revaluation process and derive profit or loss. But here we are neither been okay touching any of the asset value nor the liability value, but still they ask us to prepare revaluation account. That means you have a claim which is exceeding your reserve amount. So for that, what will be your journal entry? So first one, you are going to work out for your, okay, I'll write here working notes or entries. First one, you're going to work out on the WCR. How much is your reserve value? Very good. Rupees 1 lakh 70. What is the claim amount? 2 lakhs rupees. So whether the claim is increased or the claim is decreased, how it is? Okay, claim is greater by rupees 30,000. So in this case, how the journal will be is workman compensation reserve account. Never to use the shortcuts. That's why I didn't write WCR. Okay, workman compensation reserve account is debited with the value of rupees 1 lakh 70. You have got shortage of 30,000 that should be routed through an account called revaluation account, and then you'll credit the claim account to workman compensation claim account, entire value 2 lakhs. Now, once you are done with this entry, the amount whatever is standing in the revaluation should be debited, what which is debited should be credited to the partner's capital or current account. So here there are four partners, right? P, Q, R, and S. Am I right? Yes. And the ratio is 1:4:3. Okay, in the old profit sharing ratio, it should be distributed. So that means 1:4:3. If I add all this, it comes to 10. 1 by 10, 4 by 10, 2 by 10, and 3 by 10. Okay. So when I'm going to distribute this among those four people, 1 by 10, okay, next is 4 by 10, 3, and sorry, 2 and 3. 2, 3. Just cancelling one common zero. So 3000 into 1 is 3000. Over here, 3000 into 4 is 12,000. 3000 into 2 is 6,000. 3000 into 3 is 9,000. I got the amount which needs to be distributed. Now the entry will be as P's capital account is debited, Q's capital account is debited, R's capital account is debited, and S capital account is debited to revaluation account. So the amount in revaluation is 30,000 and it is going to be divided in 3, 12, 6, 9. 3, 12, 6, 9. So we have taken the action for WCR, which was the first step as I said in the beginning. Okay, you have to take corrective action for that 6 out of 7 items. This is done. Correct? Now why this we have to do is because all these items will target the partner's capital only. As a question I've also asked us to prepare the partner's capital account. If we miss out to do any of these adjustments, then of course the sum will give us a wrong answer. So first to complete this and go for the next, you'll get the correct answer always. Okay. Since there is a revaluation account existing here, I need to prepare the revaluation account. Okay. I have to prepare revaluation account. Remember, revaluation account is a ledger account, and there is one more name for revaluation. Revaluation account can also be called as any idea? No idea. Okay, revaluation account can also be denoted as profit and loss adjustment account. Profit and loss adjustment account. It is there in our textbook also. Okay, probably I'll just show you. I'll show you. Then you will have a clarity. Okay. If you just take your page for this top heading, the revaluation of assets and reassessment of liabilities, just you go for that page. The first point, okay, when the revised changes, values, okay, and liabilities are recorded, under that you have in bold italics, revaluation account or profit and loss. So in some question they may ask you prepare P&L adjustment account. Many students they will find it difficult or they get confused like P&L adjustment account means P&L appropriation account da. அப்படின்னு நினைச்சு they'll go in a misunderstanding or misconception and they go wrong. Okay, so P&L adjustment account means they are referring to revaluation account. Is it clear? So I think this your teacher might have not said you. Yes, because we know even though experienced teachers, okay, they lose out something, and that is why we are here to guide you people. Okay, right. So coming to the concept. Here, partners capital account this we prepared, but first let us complete this revaluation account. It is also a ledger account. So now I'm going to prepare it, debit and credit side. So in this journal, you can see like revaluation account has got debited to workman compensation claim, right? So first I should bring that workman compensation claim towards this. Okay. So here I write to workman compensation claim 30,000. On the other hand, it is going to be as by revaluation loss. because you are transfer the loss on revaluation to the partner's capital account. Okay, so by revaluation loss, the same 30,000 dividing to partners capital of P, Q, R and S in the ratio of 3,000, 12,000, 6,000, 9,000, and both becomes equal with a total of rupees 30,000. So first step we are done with preparing the partners revaluation account. Check it out. Is it clear to you? We are just talking about the partners, okay, revaluation account concept. One compensation claim, okay, and here the loss which we are transferred to the capital account. Okay. Now we need to prepare something called as partners capital account. Okay, and that's the second item which is given in the question. Okay. So partners capital account. Let me prepare the format of it. Debit, particulars, P, Q, R, S. Rupee symbol is always important, Kana, because we are working on accountancy. No, rupee is very important. Okay, heading over here. Okay, so first, when you're going to prepare the partners capital account, bring out the balance which is shown in the PN in the balance sheet. So 2 lakhs, 3 lakhs, 4 lakhs, and 5 lakhs. That you first bring it up. Okay, so in partners capital account, sorry, yeah, on the credit side, you will bring it up. Okay, so by balance brought down. Okay, so what are the values that you found? 2, 3, 4, and 5. Okay, the next one. Okay, according to the given question, if you see, we had the loss on WC, so on loss on revaluation. So that should also be brought into the picture. So how you are going to bring it? By revaluation account. Okay, there is revaluation loss. Okay, so 3, 12, 6, 9 by revaluation loss. I'm sorry. Loss will go to the credit. Okay, so to revaluation loss 3, 12, 9, and 6, right? This is the values, right? Okay, so then with this also. Now, there was something which was given the question like about the goodwill, right? They have mentioned something about the goodwill, like 2,70,000. So, what is that goodwill? That goodwill is self-generated goodwill, correct? So, I already informed you what needs to be done if it is a self-generated goodwill is. Okay, go according to step. First, find out the gain or sacrifice among the old partners. Okay, so first let us take the old PSR and let us also mention the new PSR. The partners are P, Q, R, and S. Let's see what is the values given for the partners. Old price and new 1423. Okay, 1423. So which means 1 by 10, 4 by 10, 2 by 10, 3 by 10. And let's also see what is the new profit sharing ratio. It is given equally. So new PSR is 1 by 4, 1 by 4, 1 by 4, and 1 by 4. So first step, what I have mentioned here, just go once again, find out gain or sacrifice among the partners. Okay, so there is going to be one more working on. Okay, so first have this as your mnemonic. Okay, to find out the gaining ratio or the sacrificing ratio, I'll give you a mnemonic song. S stands for sacrifice, old for O for old, N for new, G for gain. Okay, so when you want to find out the sacrificing ratio, the formula is old ratio minus new ratio. Sacrificing ratio, the formula is the old ratio minus new ratio. Need not mug up the formula. You can easily remember the formula. So let's calculate for the partners. First for P, old ratio it was 1 by 10 minus new ratio is 1 by 4. What will be the LCM if you take for 10 and 4? Mm-hmm. Is it so? Or 20? Say any one. How you can have two answers? LCM? Yes. Okay, because 10 and 4, okay, in two table, 5 times, 2 times. More than that, it won't go. 5 twos are 10, 10 twos are 20. So 20 will be the LCM. So if I want to convert this 10 to 20, multiply the base with 2, even the numerator with 2. So 2 minus here into 5 into 5. So that gives you 5. So now 2 minus 5 by 20, that means it is minus 3 by 20. And I hope you are aware that in this chapter, the partner who gets a positive value is sacrifice, who gets a negative value is a gain. So for P, you have gained. Okay, there is a gain for P. Now, in the same way, you can calculate for Q, okay, R and S. So 1, 4, 3, 2, right? It was or 1, 4, 2, 3. 1, 4, 2, yeah, 2, 3. Okay. 1, 4, 2, 3. So 4 by 10, 2 by 10, 3 by 10, minus 1 by 4, minus 1 by 4, minus 1 by 4. So LCM is going to be as 20, no doubt about it. So 10 into 2, 4 into 2, 8 minus 4 into 5, 1 into 5, 5. So 8 minus 5 is 3 by 20. With respect to R, into 2 and numerator also into 2, 4 into 5 into 5 minus 5, that is minus 1 by 20. So here there is a sacrifice, here there is a gain. Coming up to the next one, 10 into 2, 3 into 2, 6 minus 4 into 5, 1 into 5, 5. So positive 1 by 20. So here this is a what? Gain or sacrifice? Sacrifice. Okay. The next one is check out what is the one. Apply the gaining ratio or the sacrificing ratio on the firm's goodwill to decide the individual partner's share of goodwill. Okay, what was the firm's goodwill? If you see, it was given as rupees 2,07,000 rupees. Correct? Okay, so just you're going to calculate on 2,70,000 how much you're going to get it. Okay, so here they have done that calculation on 2,70,000. Okay, they just applied the value like 6 by 40. Okay, or 6 by that's what, as I said, they are simplified it. Okay, we'll take as 20. Okay, so when you apply this particular value on the gain or sorry on the goodwill, you'll get the values. Just you calculate and tell me on the value of this 2,70,000. Okay, you got partners P, Q, R, and S. And I'll just see what is the value that we have got it. Okay, like gain or sacrifice. If you see for P, it is a gain, then sacrifice for Q, and for R, gain, and for S, sacrifice. Okay, here also, if you could see gain, sacrifice, gain, sacrifice. Okay, let me write the gaining ratio and the sacrificing ratio. Okay, so it is 3 by 20, right? For P, it is 3 by 20. For R, it is going to be as same 3 by 20. Okay, and then for Q, it is 1 by 20. R and S, it is 1 by 20. That's what even we have got, I hope so. Let us reconfirm. Yes, exactly. Okay. So now you substitute and derive me the value, how much will be the value for P, Q, R, and S. Yeah, very good. Very good. 13,500, right? So the second step is also over, right? As I given here, step one, step two, step three. Okay, you can see here we are done the first step. We are done with the second step. Applied and you got the value. Then what has been said? Pass the journal entry. Gaining partners to be debited, sacrificing partners to be created, and the amount has also been derived, right? So just pass the journal entry here. Whoever the gain partner, just you can see to it. Gain is P and R. So P and R are gained partners. Okay, so prepare the journal according to that. P is a gained partner and R. Very good. Now the question is not asked is to pass journal. Okay, but still why I'm saying you to do is you remember in your mind not an issue. If you forget that this entry is also touching base on a partner's capital and you go wrongly, then obviously the sum will not give you the right answer. So here, gaining partner, okay, there is P and R's capital is debited, okay, whereas the sacrificing partner Q and S are being credited, right? So that means in the partner's capital account, what we are already maintaining it, okay, okay, fine. I've already made it here. Just a minute. Let me take this working in the sidelines. So 2Q and 2S because the entry is in such a way. Okay, you will pass the entry as 2Q's capital and 2S capital, right? But the amount should be in which values? It should be as Yes. So E and R. So for P, 4500 and 13500. Any doubt up to this? The same you have to bring on the other side. Okay. By P's capital by R's capital. So the value should go in Q here 4500, and for R it go to S 13500. Clear with all this? Okay. Now you can also check your partner's capital, whatever we done is available out there or not. By balance brought down, by P's and R's, they are taken together as one line item. We are taken it separately, not an issue. So these values are available, and these values are also available. Here revaluation loss value we took into account, and then Q and S capital account 4500 13500 we taken into account. Apart from this, we don't have anything else. Now, let us try to find out the total of the partner's capital account. What is the net value that we have gotten? For P, how much you have? Okay, this is on the credit. On the debit, what is the total that you have for P? 43,500. Find out the difference between these two. 2 lakhs minus 43,500. What is the difference between these two? 1,52,500 rupees is available. Okay. The same way for Q on the credit side, how much we have it? Okay. First, let me record the credit. 3,40,500. What is on the debit of partner Q? What is the difference between these two values? Okay. So these two are clear, right? Okay. Now the same way for R. What is the value available for R? Write it on the credit. 4 lakhs. What is the total available for R on the debit side? Okay. Difference between these two? 3 lakh. Okay. Even for the partner, yes. What is available for S on the credit side? On the debit side of the partner, yes. How much you have? Hmm. Okay. difference So we have found what is the available balance in each of these partners. Okay, separately. Now what it is, you total up all these amount together. Total the value and tell me how much you get. Yeah. Okay. 13 lakhs 72,000 rupees. Okay. This is nothing but total available capital of the firm. How in the sense individually they are called partners, collectively they are called as firm, right? Okay. This is a step what they have performed it over here. 13 lakh 70,000. But how much you said? 72,000. Somewhere I think you've gone wrong. 1 lakh 56 500. Okay. 1 lakh 56 500. Okay. The next value you said 3 lakh 28 500. 3 lakh 28 500. Okay. The next one is 3 lakhs 80,500. It's coming. Hmm? How come 4 lakh 6,000? Okay. For R, okay. Mhm. 1 minute. There is a 6,000 and 3,000. Yeah, put together is 13% 22. Right? Okay, there I think you have made wrong. 3 lakh 85 is coming as a balance, Kana. Check it up. Check it up and tell me, no? Yes, Kana, yes, Kana. Wait, 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 wait. For R, right? For PQR, 6,000, 13,000. I made a mistake. Oh, just a minute. 312 600. Wait. Then I made a mistake in posting. And let me check here also what value I got it. 312,609. Okay, while posting there, I made 9 and 6. Okay, it is my mistake. I'm sorry. Just a minute. This is 6. Here, this 9. I think the rest is correct. 13,500. Yes, and there 9,000 is perfect. Then I think here we need to change the value. Okay, so here it is going to be as 9,000. And here it is 6,000 and what is other value 13,500, so which means 19,500. Yeah, and over here it is 9,000 to be separated. 6,500, 4,500. uh, So now this will give you 13 lakh 70,000 rupees. Okay, this is the value which you will be getting for this partner. Now this is the total value of the firm, and this calculation is what they have made it here. Okay, how it is done? I have made it the other way. Okay, debit balance and the credit balance. I have found the difference. Now what needs to be done is we should find what is the capital of each partner that has to be. Okay, so that is what we are going to find it now. Okay, I'm making sense to you. How much is to be for each partner? Okay. Yes, actual capital. So the overall capital is 13 lakh 70,000. So how much each partner? One partner is having one fourth share. So what is one fourth of this particular value? 13 lakh 70,000. Okay, calculate what is one fourth of, okay, 13 lakh 70,000 into 1 by 4. So 4 table, 4 threes are 12, 13, 1 balance, 4 fours are 16, 17, 1 balance, 4 twos are 8, 9, 10, 2 balance, 5 times. So 3 lakh 42, 500 is the required balance. Okay, fine. Now you have to find out the difference between available and required. You're going to add. Yes, 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 of course. Okay, now I'm going to bring out the required balance. Okay, required amount, required capital of each partner. So it came to 3 lakh 42 500, right? In each of the cases, 3 lakh 42 500, 3 lakh 42 500, 3 lakh 42 500. Now compare between these. This is the available, this is the required. Now you find out whether he has to bring or take away. He has to bring the capital or he has to withdraw. First case, how much is the value? Difference between 3 lakh 42 500 and 1 lakh 56 500. Okay, so rupees 1 lakh. Okay, then, okay, how much? Okay, fine. The next case, okay, how much? 38,000. Okay, then finally, okay, how much? 1 lakh 62,000. So now the question says we are going to route up through the cash only in the beginning itself. So in that case, whoever has to bring the value, the entry will be as cash or bank account is debited to that particular partner's capital account. Okay, so that means you could see in the capital account by P and by Q with this values on the credit side. Just I'm taking you to the partner's capital account. Can you able to see by cash? Okay, 1 lakh 86 in the P and 14,000. And then the other two partners who are withdrawing the capital, okay, is also very clear, and their value we have to take it to the debit side. So how much is the value? If you see, their value comes to 38,000 and 1,62,000. So here to cash our bank account, the withdrawal 38,000, 1,62,000. Any doubt up to this? And finally, the closing balance will be two balance carried on, and everyone will have 3,42,500 only as a closing balance, and then the total of each partner comes over here. Is it clear to you? And finally, we are just going to bring out the balance sheet. So here, the old balance sheet is a base for the new balance sheet. In the asset side, nothing is being disturbed. So fixed asset and current asset value is going to come in as such 12 lakh 70 and 5 lakh 30. So you are bringing that value fixed assets, okay, and current assets 12 lakh and this, and total comes to this. On the liability side, you will have the partner's capital account, but the amount should be the new amount what you got over here. That is 3 lakh 42,500, which you got it for each partner. No? That is the amount you have to bring in for each partner. Clear? Okay. And then you are also bringing the value of your sundry creditors from the old balance sheet. The old balance sheet shows sundry creditors as rupees 2 lakh 30,000. The same value is going to exist even now 2 lakh 30,000. And then you have created a liability, that is there is a claim for rupees 30,000 to be paid off. There is a, it comes to 2 lakh rupees, okay. So that 2 lakh rupees claim you have to bring into the picture. Provision for workman compensation claim 2 lakh, you are still not paid this amount. Remember, you have not cleared this payment of claim. You have only made the arrangement to meet the claim. Okay, so only if you have paid the claim, this will not appear in your balance sheet. Since it is still appearing, okay, you have to show that amount of 2 lakhs, and only then your balance sheet will become equal tally. Is it clear? Okay. So I just feel like you are able to understanding my concepts in the online mode. There won't be any issues for you as of now. Is it? Did you feel any discrepancies or any discomforts? Okay, have you taken the complete notes, like the calculations, the points, whatever I discussed? Okay, fine. So I'm just stopping it today's session just by here. Okay, because let you practice. Because I felt like here now Rohit will be joining up, but he didn't join. He has sent a message. It seems. Okay, so the other problem. Okay, we'll be discussing along with Rohit because this concept I taught for Rohit. The other concept is yet to be taught. Okay, I'll teach him along with you. Okay, problem. I'll try to schedule a session. Okay. So hope you are able to capture it, right? Okay, thank you. Welcome.